Hello and welcome. This is BQ Prime. I'm Agam Vakil, and this is the F&O Show, a show in which we take you through all the trends and all that is happening in Indian equity derivatives markets, specifically futures and options. To take a look at what's going on today, we have in fact started off on a weak note, and after that, we're looking at a slight rebound from a day's lows in today's day of trade. For now, however, the Nifty and the Bank Nifty, both of them are trending lower as compared to yesterday. That said, it is a Bank Nifty expiry. We're watching out for the crucial level of 44,000 at the moment, because it seems that the Bank Nifty is looking to defend that. In terms of the Bank Nifty, that's where we're also seeing the maximum open interest, the 44,000 call, at least at the moment. And in terms of the most active options as well, naturally, we're seeing a little more writing around the 44,000 call. Considering the fact that we have in this very moment moved above that mark, it seems that that could become even more and more crucial in terms of covering. But on the lower end, of course, keeping an eye on 43,900 put. That is also where we've seen a significant amount of writing coming through. That said, as far as the Nifty is concerned as well, we haven't seen too much traction. We are watching out for the 19,500 mark. Again, a lot of traction there, and keeping an eye on the 19,400 levels as well, considering it is just sitting above that mark. But where do we go from here, and what do we do with the markets here? And is there any way by which we can leverage derivatives, pun intended there, in terms of the strategies being posed for? Let's get in our expert for today. We have Manoj who's been looking at these markets for very, very long, a very experienced mind as far as derivatives are concerned. He's from Murlidharan Broking. Manoj, good morning, and thank you so much for joining in. It's great to have you back after a really long time. Can you tell us about how you are approaching the Nifty at the moment?
Good morning, Agam, and thank you so much for the kind words. Now, Agam, I believe more into the objective way of looking into the market, more from the price action as well as the positioning that happens in the derivative side. So let's go back and see, when we started this October series versus what we started the September series, the Nifty positions were less by a good 3 to 5 odd lakhs. Now we understand the concept of market-wide open interest. So whenever a new contract starts, a simple way of understanding this is you need to see what is the fresh position which is made into the current month. So it's like you have a portfolio of 1 crore rupees. So if you decide to raise cash by a good 8 or 10%, so obviously you will roll less amount of positions into next month, and consecutively the position in the Nifty also comes down. So this is one way in which we also try to see if there is a reverse arbitrage. Now, as the favorite strategy they have been doing at least the last 6 to 7 months is taking money out in the cash market, and we are seeing some positions being built in the stock future. So the FI just started this series with a good 72% short in the index futures. Now, we all understand that obviously there is huge amount of call option selling thanks to the weekly expiry and on every other day. So the volatility index in the Nifty has been hovering around that 12 to 13 odd percent. So that simply comes to a math saying that a 700 to 740 odd points is where maximum month of October might be. Now we believe that 19,700, now that has become a stiff resistance for this month October series, and the Nifty might drift down to a 19,200 or 300. Now, because for the first weekly expiry that we have tomorrow, we believe that intraday, this is the Nifty futures level base for speaking about 19,480 to 19,500. That's the resistance, and we expect 19,320 on the Nifty futures. So a better way is to go for the direction, do not really time the expiry. So by the 12th October, 19,400 strike put option between 100 to 110, keep a stop loss of 50. The target can be an ambitious 170 rupees on that.
Right. Manoj, we are also looking at the Bank Nifty expiry in today's day of trade. If you could offer us your intraday view here, considering and especially given it is a weekly options expiry.
Yeah, I'll give you a simple analysis, a simple way to look into the Bank Nifty points. Just look at the number of points the Nifty is down and the number of points the Bank Nifty is. When you see a ratio of 1:3, That is 100 points fall on the Nifty corresponds to almost 300 points on the Bank Nifty. Now, obviously, there is a rational on the quantitative analysis. We are not getting there. But just to say that 2.28, that is the ratio between these two indices, this is where the resistance is. So 44,100 on the spot, roughly around 44,080 if I'm not mistaken. So 80 more points on the upside is where the resistance is, and unfortunately we believe 43,800 on the spot Bank Nifty is also possible today. So better trade is to buy a 44,100 put option, you buy between a 60 to 80 rupees. You need to hold it for the entire day. The target can be around 150 to 160 on that.
All right, fair enough. So that's your intraday view as far as the Bank Nifty goes, and well, we're keeping an eye on the 43,800 level at the moment. But very quickly, let me as well talk about a handful of stocks which are buzzing in trade today. So I'll take a look at Nestle India first, of course, because that's largely because of the news coming in from what we understand is that the management will consider a stock split, and because of that, we've seen a lot of traction. Now, Nestle India is usually not a very active, stock which when it comes to the futures and options space. But in today's day of trade, I reckon a lot of traders may have actually taken some sort of positions. It just so happens that while Nestle India did show a tremendous amount of strength, it has also given away all its intraday strength. So it's become extremely volatile in today's day of trade. For now, after going up significantly high, it has come off and it is now only trading 1% gains as compared to yesterday. The other stock that I wanted to talk about was Bajaj Finance. And of course, Bajaj Finance has come up with this quarterly update where, on expected lines perhaps, we have seen good growth coming in. Pardon me. Bajaj Finance also advanced, and in fact, on an intraday basis, it moved about the mark of 8,000, and that has also, in fact, retracted from its intraday highs. So we're looking at a little bit of perhaps profit taking, because do remember that Bajaj Finance has moved from 7,500 levels to as much as 8,000 only in about 6 to 7 sessions. So it's been a quick ride there as well. So these are some of the stocks that I wanted to highlight to our viewers. But Manoj, if I can come back to you on some stock calls that you have as well, can you take us through those?
Yeah. So again, like you're mentioning about Nestle, I guess that is one stock. Even if you look from the September to October series, it has good positioning. But now there are fresh calls in some stocks like a Colgate-Palmolive. We believe that 1968 to 1970, that's a good pivot or weighted average price of support for the stock. So that's a good level to buy that. The stop loss can be 1940, and 2040 is what we're expecting at least in the Colgate-Palmolive for this October series. Power Grid also from the power sector, NTPC and Power Grid both, but we'll still go with Power Grid at this point of time. 195 to 197, that's a good level to go long. A stop loss of 186 and a target close to 206 is very much possible in this stock.
All right. Manoj, before since we have a little bit more time, in general, want also your view as far as the markets on a positional basis are concerned. I'm sure that a lot of traders would perhaps want to take a slightly longer term view. Right. If you could give us your view on the markets, maybe perhaps not just the specific expiry of the month of October, but over the next, couple of expiries, how would you address this?
Right. So again, the major shift in the Indian markets has happened in 2016-17. The FIs used to be around 58 to 60 odd percent, and so the FI stats used to dictate the trend. But now, if you see the distribution, they are closer to 46% with good amount of HNIs and the retail also at par to their weightage. So that is exactly why we are seeing this volatility more. Now, FIs use reverse arbitrage. Now, what is reverse arbitrage? Is simply you do not disturb the price in the market, but you try to take out your money by selling in the cash market, which is a delivery selling, and you hedge it by buying some stock futures, which will keep on rolling from month to month. So, basis this reverse arbitrage, which is commonly known as RA into the derivative field. So, this reverse arbitrage is taken good amount of 8 to 12 months. The FIs have been exiting. Now, we need to understand. The P-note percentage in the FIR desk used to be at 20 to 24%. This is 3 years before, and now, if I'm not mistaken, it has fallen down to around 12 to 13%. Now, these are the guys who need to convert the currency immediately into your local currency, and that is when the trade comes in. So if you see the Nifty managed to still make a new high, and the Bank Nifty has not done it also. The last couple of months when the Nifty was during the new high. So it simply says that the money is not really pouring into the banking stocks, and needless to say, the highest weightage, the banking and financials are almost 38 to 39, or maybe a 40 odd percent into the Nifty. Almost maybe one fourth, more than, sorry, two-third of your Nifty is not being hampered, and there is money which is coming out, and rest of the sectors like an IT or maybe automobile is trying to pace it up. So the broader range is, we simply look into the entire weighted average at which this entire equation happens. So I was just mentioning about 2.28. Bank Nifty and Nifty has a ratio between them. It is currently at 2.26 now. Unfortunately, the support is at 2.22. So if I have to say, and the levels of 18,800 to maybe an 18,900, I believe that would be a level where the prudence of buying or maybe the selling in the indices might come down, and closer to 19,700. That is where. So this 900 odd points is where the broader market would be, and we all understand that 11th or 12th of this month, we'll see the result season coming in, and that has a correlation to the FI Pro and also from the domestic institution. So, if I have to say, at least for this year end 2023, levels of 18,800 to 18,900 should be a good level. And once we breach 19,700, the Nifty should be heading to 21,200. Now, this happens to be based on some quantitative analysis that we're doing. So, as of now, the downside is around 600 odd point. Buy a put option to hedge your position. Keep buying quality stock because the upside can be a good 14 to 1600 odd points in the next quarter's time.
Okay, well, watching out for levels over 20,000 comfortably as far as the benchmarks are concerned for now, and continue to hedge your positions by buying put. That's the advice coming in from Manoj Valar of Religare Securities. Manoj, thank you so much for joining in and taking us through your views on the markets as well as the derivative space. But on that note, we're signing out. But don't go anywhere, Losma lined up. Stay tuned to BQ Prime, and we'll keep bringing you more.